What happens when an entire nation stops paying taxes? The answer destroyed a country. In 2010, actor Wesley Snipes walked into a federal prison to begin serving 3 years for failing to file tax returns on $38 million in income. The same government that couldn't convict Al Capone for murder got him for tax evasion instead. Every year, the IRS collects $4.4 trillion in taxes. And every year, $688 billion goes unpaid. What happens when you stop paying? The answer is a process so methodical, so relentless, that it can destroy your finances, your freedom, and your future. The moment you miss a tax deadline, a clock starts ticking. About 5 weeks after April 15th, the IRS sends what's called a CP-14 notice. It's a polite letter. It tells you how much you owe, adds interest, and gives you 21 days to pay. Most people panic, pay up, and that's the end of it. But if you ignore it, the letters keep coming. The IRS follows a strict escalation ladder. CP 501 is the first reminder. CP 503 is the second. CP 504 is the final notice before action. Each one gets more serious. Each one adds more penalties. The failure to file penalty alone is 5% of unpaid taxes per month, up to 25%. The failure to pay penalty adds another 0.5% per month. And interest compounds daily on everything you owe. A $10,000 tax bill can become $15,000 in just 2 years without a single additional dollar of income. But here's what most people don't realize. The IRS doesn't need a court order to start collecting. Under the Internal Revenue Code, the IRS has something called administrative authority. They can file a federal tax lien against your property. This is a public record. It appears on your credit report. It tells every bank, every lender, every landlord that you owe the federal government money. And once that lien is filed, selling your house, refinancing your mortgage, or even getting a car loan becomes nearly impossible. If you still don't pay after the lien, the IRS moves to levies. A levy is not a claim on your property. It's a seizure. The IRS can levy your bank accounts, taking every dollar in them. They can garnish up to 70% of your disposable income from your paycheck. They can seize your car, your house, even your retirement accounts. And since 2018, there's a punishment most people never see coming. The FAST Act allows the IRS to certify your tax debt as seriously delinquent if you owe more than $59,000. When that happens, the State Department revokes your passport. You can't leave the country. You can't renew your passport. You're effectively trapped. This isn't hypothetical. In 2023, the IRS certified over 400,000 taxpayers for passport revocation. 400,000 Americans who couldn't fly internationally because they owed taxes. But the IRS isn't just after individuals. If you're a business owner and you fail to pay employment taxes, the IRS can hold you personally liable through what's called the trust fund recovery penalty. This means they can go after your personal bank accounts, your house, and your personal assets for the taxes your business was supposed to withhold from employees. The penalty equals 100% of the unpaid trust fund taxes. There's no corporate shield. There's no limited liability. The IRS punches straight through. Most tax cases stay civil. The IRS collects what you owe, adds penalties, and moves on. But if the IRS believes you willfully evaded taxes, it becomes criminal. Under Section 7201 of the Internal Revenue Code, tax evasion is a federal felony. The maximum penalty is 5 years in federal prison and a $250,000 fine for each count. And the IRS Criminal Investigation Division doesn't lose often. Their conviction rate is over 90%. Once they decide to prosecute, you're almost certainly going to prison. The IRS opens about 2,000 criminal investigations per year. That might sound like a small number compared to 150 million individual tax returns. But the IRS doesn't pick cases randomly. They target the most egregious offenders and the cases most likely to make headlines. Because the real goal of criminal prosecution isn't just punishment, it's deterrence. The IRS wants every taxpayer in America to know that the consequences of willful evasion are prison. Not a fine, not a penalty, prison. And here's the part that terrifies tax attorneys. The statute of limitations for civil tax cases is 6 years. But for criminal tax fraud, there is no statute of limitations. The IRS can prosecute you for tax fraud committed 20, 30, even 40 years ago if they can prove it was willful. The most famous tax case in American history isn't about taxes at all. Al Capone ran the most violent crime empire in Chicago during the 1920s. Murder, bootlegging, extortion. The FBI couldn't touch him. Witnesses disappeared. Evidence vanished. But Capone made one mistake. He lived lavishly while reporting almost no income. In 1931, the IRS convicted him of tax evasion and sent him to Alcatraz for 11 years. The debt was only $215,000, about $4 million in today's money. But it destroyed the most powerful gangster in America. That template hasn't changed. Wesley Snipes earned $38 million over 6 years and filed 0 tax returns. He listened to a tax advisor named Eddie Ray Kahn who told him income tax was voluntary. Snipes went to prison for 3 years. Kahn got 10. Leona Helmsley, the hotel billionaire, famously told her housekeeper, "Only the little people pay taxes." She went to prison for 16 months for evading $1.2 million. Pete Rose, baseball's all-time hits leader, went to prison for 5 months for hiding memorabilia income. And Lauryn Hill, the Grammy-winning singer, served 3 months for failing to pay $1.8 million in taxes on earnings from 2005 to 2007. But the biggest individual case belongs to Walter Anderson. He hid $365 million in offshore accounts across 30 countries. When the IRS caught him in 2007, he received 9 years in federal prison, the longest sentence for tax evasion at the time. The lesson is always the same. It doesn't matter how rich you are. It doesn't matter how famous. The IRS gets paid. The IRS isn't just a government agency. It's the most powerful collection machine ever built. In fiscal year 2023, the IRS collected $4.44 trillion from 150 million individual returns and 7 million business returns. That's $12 billion per day, $500 million per hour, $8.4 million every single minute. And they do this with a relatively small workforce. The IRS has about 80,000 employees, roughly the same number as a large university. But their technology is evolving fast. The IRS now receives over 4 billion information documents per year. Every W-2 your employer sends, every 1099 from your bank, every stock trade, every real estate transaction, every cryptocurrency exchange. They cross-reference everything automatically. If your reported income doesn't match what your employer, your bank, and your broker told the IRS, their system flags it immediately. The overall audit rate has dropped to just 0.4%. But that number is misleading. For taxpayers earning over $1 million, the audit rate jumps to 1.1%. For those claiming the earned income tax credit under $25,000, it's also about 1%. And with the $80 billion in new funding from the Inflation Reduction Act, the IRS is hiring thousands of new agents and upgrading its systems. The era of budget-starved IRS enforcement is ending. The machine is getting faster, smarter, and harder to escape. Now imagine what happens if everyone stops paying. The $4.4 trillion that funds the entire federal government disappears overnight. Within 2 weeks, 2.1 million federal employees stop getting paid. The military, the FBI, the Border Patrol, the TSA, air traffic controllers, all unpaid. Within 4 weeks, Social Security checks stop. 67 million Americans who depend on Social Security for retirement, disability, and survivor benefits get nothing. Medicare payments to hospitals and doctors freeze. Veterans' benefits vanish. Within 2 months, the federal highway system gets no maintenance funding. The FAA can't pay air traffic controllers, so commercial aviation shuts down. Food safety inspections stop. The CDC can't monitor disease outbreaks. FEMA can't respond to natural disasters. Federal courts shut down. The prison system can't pay guards. Think about that for a moment. $1.4 trillion goes to Social Security. $900 billion goes to Medicare. $886 billion funds the military. $300 billion pays interest on the national debt. Without tax revenue, the United States government defaults on its debt for the first time in history. Treasury bonds, the safest investment in the world, become worthless. The dollar crashes. Interest rates spike. The global financial system, which is built on the assumption that U.S. Treasury bonds are risk-free, collapses. This isn't speculation. This is the mathematical reality of what happens when $4.4 trillion disappears. If you think this is theoretical, look at Greece. Before the 2010 debt crisis, tax evasion in Greece wasn't just common. It was a national sport. The government estimated that Greeks evaded about 20 billion euros in taxes every year. Only 5,000 Greek citizens declared annual income above 100,000 euros. But satellite imagery revealed more than 60,000 swimming pools in Athens alone. The math didn't add up. When the financial crisis hit, Greece didn't have the tax revenue to service its debt. The country's GDP contracted by 25%. Unemployment hit 27%. Youth unemployment reached 60%. The European Union had to bail Greece out with 289 billion euros across 3 separate rescue packages. Banks closed for weeks. ATM withdrawals were limited to 60 euros per day. Pensioners lined up at bank branches just to collect 120 euros per week. The Greek economy didn't recover to its pre-crisis level for over a decade. Italy tells a similar story. The Italian shadow economy is estimated at 12 to 15% of GDP, roughly 200 billion euros operating completely outside the tax system. Italy's annual tax gap is about 100 billion euros. And Argentina's chronic tax evasion contributed to its 2001 default on $93 billion in sovereign debt, triggering the largest sovereign default in history at the time. The gap between what governments are owed and what they actually collect is staggering. In the United States alone, the IRS estimates the gross tax gap at $688 billion per year. That means nearly $700 billion in legally owed taxes goes unpaid annually. Over a decade, that's more than $7 trillion in lost revenue. Globally, the Tax Justice Network estimates that $472 billion is lost every year to corporate tax abuse, mainly through profit shifting to low-tax jurisdictions. Another $171 billion disappears into individual offshore tax evasion. Combined, that's $643 billion that governments around the world never collect. To put that in perspective, $643 billion per year is enough to fund universal health care for every country in Africa. It's enough to end extreme poverty globally within a decade. It's more than the entire GDP of Sweden. And these are conservative estimates. The true global tax gap, including small business cash payments, informal economies, and unreported income, could be well over $1 trillion per year. The irony is that most of this lost revenue doesn't come from poor people hiding cash. It comes from the wealthiest individuals and the largest corporations using legal structures to minimize what they owe. The system doesn't break because people stop paying. It bends because the biggest players pay less than they should. Throughout American history, there have been people who genuinely believe they didn't have to pay taxes. The sovereign citizen movement argues that income tax is voluntary. The 861 argument claims that domestic income isn't taxable. The wages aren't income theory argues that labor exchanged for money isn't income under the 16th Amendment. Courts have rejected every single one of these arguments. Unanimously, repeatedly, for decades. The IRS doesn't just dismiss these claims. They actively penalize them. Filing a frivolous tax return carries an automatic $5,000 penalty under Section 6702 of the Internal Revenue Code. The most tragic case is Irwin Schiff, the father of economist Peter Schiff. Irwin spent decades writing books and giving lectures arguing that income tax was voluntary and unconstitutional. He was convicted of tax evasion in 2005 and sentenced to over 13 years in federal prison. He died there in 2015 at the age of 87, blind and serving out his sentence. His books were banned by court order. Eddie Ray Cohn, the man who convinced Wesley Snipes not to file his taxes, received 10 years in prison for promoting tax fraud schemes. His other clients collectively owed the IRS over $1 billion. Every year, the IRS publishes its Dirty Dozen list of tax scams. Tax protest schemes consistently make the list. The IRS has heard every argument. They've seen every strategy. And they have a 90% conviction rate for a reason. So what happens if you stop paying taxes? Here's the timeline. Day 1, nothing happens. Week 5, you get a letter. Month 3, penalties start compounding. Month 6, a federal tax lien hits your credit. Month 12, the IRS levies your bank account and garnishes your wages. Year 2, your passport is revoked. Year 3 to 5, if the IRS determines it was willful, you're looking at criminal prosecution with a 90% conviction rate. The IRS has a 10-year statute of limitations on collections. They are patient, they are methodical, and they always get paid. The system isn't perfect. The tax gap proves that. But the consequences for individuals who get caught are severe, predictable, and well documented. Nobody who has ever tried to beat the IRS has succeeded in the long run. Not Al Capone, not Wesley Snipes, not the billionaires, not the sovereign citizens. The $4.4 trillion machine keeps running. And it will keep running, no matter who tries to stop it. If this changed how you think about the tax system, subscribe to Tax Map and turn on notifications. Every week, we break down the rules, loopholes, and consequences that shape how the world handles money. What's the most surprising tax fact you learned today? Drop it in the comments.